Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing knowing your market and knowing your levels. The financial market includes the Forex market, derivatives, Bitcoin, commodities, gold, oil, stocks, and indices and bonds. They are all interconnected in many ways, with investors coming out of one aspect due to perceived risk and diverting some or all of their portfolio into another aspect of their financial market. This makes the financial markets more fluid and more volatile. A lot of new traders make the mistake of learning a little bit about the Forex market, opening up a trading account, and then shortly after having a punt on another market such as gold or stocks and indices, usually with horrendous results. While it is imperative that traders quickly try to comprehend how these markets are interwoven and what affects what, it is advised that in the early days of trading, new traders learn to stick to one aspect of the market at a time. Example A shows a 1-hour chart of the Dow Jones 30 index. A black arrow marks an area where the market was heavily sold off during the Asian session. If we now look at example B, we can see that the US dollar Japanese yen pair was simultaneously being sold off to lower levels. In actual fact, what was happening here is that the Dow Jones was being sold off. Traders were buying the yen because this currency is perceived to be a safe haven currency. This is just one example of how the markets are interwoven. But it proves to be a very short and important lesson with regards to not understanding the risk of trading one asset, such as Forex, without focusing on potential risks of another asset, in this case the Dow index. Incidentally, if we now revert back to sample A, we can see that after the sell-off of the Dow Jones, there was a bounce higher in the index. And if we now revert to example B, we can see that the US dollar yen also reversed from its lows and moved higher. This also shows that the Dow Jones and US dollar yen pair are almost moving in unison. They are acting in a way that the market calls correlation. One of the largest mistakes that new traders make is to move from one trading chart to another and from one currency pair to another without appropriately evaluating the exchange levels. The best way to understand these charts is to read them from left to right because they tell a story. New traders must learn to understand why price action hits certain key levels and whether this is associated to fundamental or technical reasons. By getting a full grasp of the reasons for currency moves, traders will more easily be able to identify trading levels and then of course adjust their trading around them. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.